Bam, 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 bam. Bam. All right, morning everyone. Let's kick it off. All right, last night's session in the U.S. was a beaten. The first time we've seen a real sell-off in a while. First, I think over 1% move either way in probably 4 weeks. The first sell-off I think in longer than that. Yeah, it's really we've really ground to kind of a low volume, low volatility type market over the past little while, and a kind of a drift higher. And I'm not really sure necessarily why it started to gain steam to the downside only yesterday. Well, I guess I do. Over the weekend, there were some comments. Greece, obviously, the tensions there have kind of heightened. It looks like there is no compromise from either side. There's obviously some negative jargon there coming from both sides of the fence. We also had Janet Yellen, which came out and said Fed was probably going to hike rates before the end of the year. I think that also got things going. And so, the two of those kind of coming together, along with maybe a little bit better data out of the U.S. to signal that it's giving the Fed a little bit more support to hike, finally started to put pressure on markets. We saw a broad-based fall in commodities yesterday across the board, everything from precious metals all the way down to oil. I think we were down a little over 2% on oil yesterday. We had, silver, platinum, gold. The entire basket was also down. So we're watching a little bit of maybe just a risk aversion play globally at the moment. We'll have to see if we get any real follow through in Asia last night. We didn't really see heavy selling. We were only down maybe slightly less than 1% across the board on average. So, I wouldn't say that there's real fear or real panic or anything like that out there, but definitely maybe a little bit risk off kind of across the globe. If you look at our chart of interest of the day, one of the things that we've been showing over the past couple months have been a lot of charts like this that are kind of showing, things that have indicators that, have over the past 20, 30 years have typically shown major turning points. So here's another one, and this is the PE to VIX ratio, which is the price to earnings ratio of S&P 500 versus the volatility index in the States. And you can see there that we've gotten to pretty heightened level of complacency. Now this chart runs all the way back into 1990. Is that 1980? Yeah, 1990. And you can see here, every time that we've really kind of gotten up to these sort of levels, there's been a relatively big correction that's happened on the back of these levels. So I think that this is just another one of those charts. It doesn't mean that there's going to be any real selling coming into the market in the next week or next month or anything like that. But I think in the grand scheme of things that we are somewhere up toward the upper end of what markets are typically where markets might typically start to turn. All right. Corporate action this morning, we had Lewis Group out with earnings, headline earnings per share at 883, definitely looking like a beat. 570 on the revenue, also a beat, and divvy per share in line at $3. All right, in terms of market data, very little to look at today. We've basically got U.S. mortgage apps, so not a whole lot to look at, but we do have quite a decent amount of charts to go through today. Finally got some movement yesterday in our local index, the first time we've seen a 1,000-pointer in quite some time. That really throws a major wrench into a lot of the charts. If we look here, this is the Aussie future. You can see here at 48,000, we've been talking about that being the level. Once we dropped that, it wasn't really just dropping 48,000 because we'd gotten below it intraday a few times. I think it was once we took out the lows from 2 sessions before or 3 sessions before, that was really where it started to come under real pressure and things started to accelerate. And what I'd like to show here is, this level at 47,300. Now we're going to zoom it forward after I've drawn that line for you. That's 47,300. And as you can see, remember we pulled down, we wicked right down to that intraday at the beginning of the month, only to recover at the end of the session. The next morning we opened above 48,000 and held it at closing basis, and we've just been up there ever since. This is, I think, a real significant level to be dropped at 47,300. And it's happened so quickly that I think maybe it's caught a lot of people on the wrong side of the market. So just be careful out there. I think technically that we've definitely dropped major support, and that has to be recognized, and there can really be some big moves that come off the back of a move like that. Next one I'm going to look at is the Rand dollar, which we looked at yesterday morning. We talked about it just above 12, maybe 1201 was our level on a closing basis. We obviously smashed through that, traded up to about 1208, 1209 last night at one point. You can see here we're well through the 12 level. I think that, that as we've talked about before, the chart for the Rand pretty much against any currency looks very bearish. And I think that there's no reason why we can't make new lows in the Rand, and maybe this is the start of it, a start of a correction, and some risk aversion, start to talk of higher U.S. rates. You can see the dollar strength that's in the market as well. It all comes together, and potentially that could be what takes us down to new lows in the Rand. All right, this is Woolworths. I wanted to look at this because we came within a few cents of making a key reversal out of Woolworths. It was definitely a major reversal nonetheless. So we traded up to $100, just over 100 intraday, which took out the highs and made a new all-time high in Woolworths. Well, at the same time, we reversed very hard on very high volume. I think we were traded probably the biggest volume, outside of maybe a closeout that I've seen in Woolworths in a long time. Especially if there wasn't any corporate action. And we did about 13 million shares yesterday, and it did it while making this huge reversal. And I think that this is real interesting. We got to see a pullback here. I would expect over the next couple of days back to at least 95. If we drop 95, then it becomes a little bit interesting. So, like I said, anytime you see these major reversals, especially on that type of volume, I think it's got to make your ears stand up a little bit, and you got to pay attention to what's going on. We'll look at Foschini Group as well, staying in the retail space, dropping out of a little bit of a flag here. But I'm just also, I think there's a major level here at 180, which we've talked about, and we pushed above 180, back above 180 after selling below it, but it hasn't been convincing. Kind of like the Aussie, it wasn't a convincing move in any way, and now we're dropping 180 again. It kind of just feels like this thing can start to roll over, and it's not a classic head and shoulders setup, but it's kind of starting to look a bit in that pattern. So, maybe this thing has a little bit of room left to correct. I think especially when you talk about a rate hike coming here, probably higher rates coming out the States. All this, we've had these power outages. I think maybe the premium can start to come out of some of the stocks like this. If we look at Foschini, okay, this is, it's not Foschini, Sunlam. So this is obviously, we looked at this one yesterday as well. We talked about the potential head and shoulder setup here. This thing dropped badly yesterday. We closed pretty close to the lows, and for me, there's a major target here down to about $63, which would be down to around there. We're right at a 200-day as of the close yesterday, and at the lows is exactly where we stopped. This level is at 72 in my mind. You could draw this from the wicks, but I'm not really a wick guy, but if it is a wicks, we're looking at 71.70 maybe. Either way, 72 I think is the way you've got to look at this. And if we've dropped out there at 72, if we come back today and see a retest of 72 and then start to see a turn down, that could also be confirmation to really jump on it and to sell this one down. All right, let's look at Impalas here. I think we showed this one yesterday as well. The support at 63, which we broke out of a little bit of an inverse head and shoulder here back in the beginning of, or the end of April. You can see that little inverse head and shoulder setup. We talked about that when we broke out. We pretty much exactly reached our target. And then now we've started to sell back off, and now we've dropped below the 63 level. I think that's major support that's gone now. This thing's held up really well. It's going to be coming out of the index now. I think there's a good chance they've got to do a capital raise. I see no reason to own this thing unless there's something coming that I don't know about. And bottom line is, we definitely dropped major support here. I see no reason why this thing can't come down, at least test the lows, or even break the lows down here around 57. If you look at standard banks, I showed a couple of these about a week ago, and that these are starting to look a bit head and shoulder-ish in nature. Some of the banks, you can see here that definitely made a little bit of a shoulder. I mean, these aren't classic perfect setups, but I think the pattern's still there. And we dropped out of the neckline of that yesterday. I call it 166. So we drop below that. I think that we can sell off considerably from here, maybe 11 Rand from that 166 level, which should take us down to about 155. And that's probably 155, 157, somewhere in there is coming down into what I think is real support for Standard Bank. The last one we'll look at, same sort of thing at a first Rand, definitely not classic in any way, but definitely a little bit of a head and shoulder setup here. If we drop these levels today at around 53.50, then I think we can come down and test the 200-day moving averages south of $50. That'll probably be a nice one to pick up around those levels, but I don't see any reason if we get global risk aversion, some global selling. We've got some of the guys caught on the wrong foot in our local market. I don't see any reason why we can't have this kind of correction. And that's it for today, guys. Good luck out there.